Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today I'm here with Patrick Juthberg of Carable. Patrick, thank you for joining us.
And thank you for having me.
So, what was your background before joining Carable?
Well, I would say I'm a typical serial entrepreneur. So I see a flaw or a problem, and of course, the urge or the will to make something happen from a problem perspective is always a driver for me. So that's more or less what I have been doing all my life. Started companies, evolving companies, and sold companies. So I've been in technology background, multiple startups, and then right now it's Carable that is 100% focus.
Well, great. So what led you to start working in the automotive sector?
My last company back in Sweden, I'm Swedish, was a SaaS company within the insurance claims sector. So more or less what we built was an engine for insurance companies to, when you crash a car, put the car into a vehicle, validating the car, and reimburse the insurance in the insurance client. So more or less, that was the step into the automotive space for me. And also, when you do a claim, you have to pay the real value of the car. And it makes no sense to validate the car and to pay out the cash of 100% of the car value instead of taking the money and buying new cars and have a 10% discount. So literally, that was the first idea to Carable.
So we have a lot of investors that listen to the show. And for those who are interested in investing in this space, what would be your advice to those people before they do so?
Well, first of all, I think to see what's happening in this space, I see first of all, the US market is huge. It's over a $700 billion market. It's very traditional. You see the dealer models, we call it asset-heavy business model. That is the dominant. It's a very fragmented market. You find about 43,000 independent dealers on the market. So if you're going to invest in this market, I would say that you have to look for something new. You have to look for something that is asset light and, of course, highly scalable. So my advice should be to find something that is really disruptive. The market is big enough. Find an asset light business model that is highly scalable, and I think you have something. I would keep away from the asset heavy business models that literally are traditional dealership, but they have moved their inventory online. And we see a lot of that happening right now. But I would take that to the next level to really have a view on how do you find a highly scalable model that is totally asset light, that don't take the cars on the balance sheet, et cetera, et cetera. So that's my advice.
So the automotive industry is undergoing a lot of change today. They're moving to ride sharing, there's autonomous vehicles coming up, and there's so many other changes coming into place around mobility. But maybe you can describe how is the industry evolving from your point of view?
I think that you're right. We see a lot of new business models coming out from a SaaS perspective. So software as a service, I would say this is transportation as a service. I see the self-driving cars coming. I see the electric cars coming. So the whole industry is in an enormous change as we speak, I would say. Tesla is, of course, the star leading the way right now. But within a 10-year period, we will still see the mass market change. I would say that we will have more like the Uber service, where you have a subscription on a transportation service. But still, the market is so big, and there will always be a space for the private-owned car. If this is self-driving car or not, yes, of course it will be a self-driving car. And of course, it will be facilitating you and your family's need, but you don't have to drive the car. But you still want to have your own car. And I think that's the market that we are really, really keen to explore right now.
So how do you see it growing, and how many companies are engaged in that sector these days?
From the perspective that we are in, so like the marketplace or the dealer, so I think the independent used car dealers will literally not have a market because all the cars will be sold from the manufacturer direct. So I think that what we see in the Tesla market right now. I see also that the used car will always be asset that has to be transacted over time. So this is why we are focusing on the used car marketplace, and also to be able to sell the car direct to another private person and bring back the margin or take back the margin. I would say that will be a driver. And that's why we are focusing on an asset-light used car marketplace instead of going the dealer way, where we literally would be able to take the car on balance, store the car, and eventually sell the car. I think that will not be the future.
There's a lot of regulatory that comes into it with the dealer structure. When do you think the regulatory is going to be overturned as it is in some other areas? For example, the ride sharing was able to overturn the taxi laws in order to bring their solution to the market. When do you think they'll continue to overturn the dealer market in order to make your solution available to the new car market, for example?
So I think there's such a big brands and big companies that are driving this sector. So all the car manufacturers are huge lobbyists. And I think that they will drive that change, the regulatory change. I think also that today we talk about driving a car, and we think that's totally normal. I would say our grandchildren, they will look at us and say, "Are you crazy? Were you driving the cars?" Yeah, we were. And I think that the government will literally be a driver on that regulatory field, because the computer driving our cars going forward will be so much better drivers than the human driver will be. So I think it's both the big companies, the car manufacturers, and also the regulatory and the governments that will drive this change.
So how does Carable fit into this landscape?
So we strongly believe to bring the margin back to the consumer. We strongly believe that you as a consumer should be able to buy or sell a car with 100% trust and transparency. And the only way to make that happen is literally to go partner-centric that we are doing right now. So we are partnering up with the strongest brand on the market to facilitate this transaction. So for example, we use Carfax for the car history report, so you know that the car is not flooded from Houston. We use Black Book for valuation of the vehicle, so you as a seller understand the value of your product, but also you as a buyer understand the value of the product that you are buying. Top of that, we put in a 241-point inspection in close cooperation with our partner Firestone. Then Firestone takes all the picture of the car and also lists the car. So that means that there is a third party, independent party, that literally describes the quality of the car in real time. Of course, when we have done that, we have the opportunity to put on a 3-month, 3,000-mile warranty on the private product still. We don't own the product. It's still a private person owning the product. And we transact it by connecting it to a finance solution so the buyer can finance the vehicle. And we do the transaction, we handle the paperwork, and everybody drives away happy. And I think that is the key for being able to transact the car online without the buyer and the seller, in fact, have to test drive and see the car, because that's already facilitated by the third parties.
What are the challenges in bringing a solution like that to the marketplace?
I would say always when you build a marketplace, it is 3 challenges. The first, of course, is supply. Supply. So if you don't have enough supply, you don't have enough cars, that's a challenge. You can't open up and you don't have anything to sell if you don't have supply. That's number one, I would say. To facilitate that, you need money. So it's also a race for capital to be able to market your brand and your marketplace going forward. And of course, the regulatory around it was one of the big challenges. We have to deep dive into the state laws to understand how do we facilitate the car transaction without being a dealer, because we are literally an IT company. We never see the car, we never own the car, and we will never ever store or facilitate the car. So I think all to all, that's the 3 key points going forward with the used car marketplace.
And so what's the next stage for your business there in taking Carable to the marketplace?
Well, right now we are in the seed funding of the company. So we are raising $2.5 million. And we will go to market in Dallas, Fort Worth, and Houston. And the first stage, the coming 15 months, is to prove the KPIs within the customer acquisition cost / unit economics and conversion. So for us, it's very important right now to understand the market, to see if we put in $100 in marketing, we sell one car. If we put in $200 in marketing, we sell 3 cars. Or if we put in $500 in marketing, we sell 10 cars. And with that KPI, we can start the growth stage for Carable.
Well, in the last few minutes that we have here, what else should we talk about that we haven't covered so far?
Well, I think the opportunity, because what we see right now coming to the used car market or the car market is a huge opportunity. So companies like Airbnb, that is a total dominant within the hospitality industry, or you can look at Uber within the transportation industry. We don't see that kind of dominant within the car industry. So the biggest vendor out there is in fact CarMax, and they own 1.8% of the market and have a $16 billion valuation on the stock market. So I see a huge potential for Carable to in fact take that dominant position within the car segment that both Airbnb, Uber, and of course Spotify within the music vertical have. So I think from that kind of perspective, this is a very interesting journey that we are on right now, and I would like to see this becoming a huge success, of course.
So how best for listeners to get back in touch with you?
Of course, please just call me. That usually is a good a good way, and I'm always available. Phone number +1 214 809 9070, and you find it, of course, attached. And also email me on patrick.juthberg@carable.com.
Great. We'll put that in the show notes and hope to have you back for a follow-up soon, and appreciate your taking time.
Thank you very much, and talk soon.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.